YouTube, good morning, good afternoon, and good evening to you. Welcome back to Money on Main Street. Happy to see you back. I'm your financial Sherpa through this journey. In today's episode, we're going to be taking a dive into what you can take advantage of financially during this pandemic or whatever this is now that's considered the new norm. And what I want to emphasize is no matter your financial situation, at least one of these tips can be applied to you. The first one's going to be very basic, then I'm going to go into some more advanced things that might not necessarily apply to your situation, but it's still good information to have regardless. So let's get into it. Now, if you're like me, your daily routine's completely been flipped upside down. The new norm for me is eating ice cream at 4 o'clock in the afternoon and watching The Office for the 15th time. But there are some things that you can take advantage of. Tip number one is to save the money that you normally would be spending on your normal routine. For instance, I had an hour commute to my work both ways, and I spent about $35 a week just on gas alone. Now, I take that money and I put it towards either stocks or savings. Now, that's just one particular example, but I'm sure you can find something that you can relate to that's similar to your situation. The important part is, though, that you're saving for whatever's going to come next. You might be having questions about your employment, if you're going to have a job tomorrow, or maybe right now you find yourself unemployed and you don't know what tomorrow is going to bring. It's important now to build that safety nest, to save as much money as you possibly can, and by paying yourself first and making sure that you are financially stable and can incur whatever's going to happen next through this crazy process. And the news is talking about a possible second shutdown. There might be implications to that. Some CEOs are saying that the actual economic fallout hasn't even happened yet. There's a lot of unknowns. There's a lot of uncertainty. So what you need to do is to build a nest. And here are my 2 tips for saving money. First off is paying yourself first. As soon as you get a paycheck, give yourself a percentage of it. Doesn't matter if it's $5 or $200 or whatever the amount is, you need to pay yourself first and at least try to save 20% if you can. I understand that might not apply to every situation, but at least get in the habit of paying yourself first. There's always going to be bills to pay, but you need to look out for you first. My second recommendation for saving money is to open up a second savings account, separate than your checking account that you use right now. My recommendation is Ally. I've been using Ally for over a year and I absolutely love it. The user interface is absolutely friendly. It's very easy to follow exactly how to transfer, do whatever I want on the app. And it tells me exactly what I have in my account balance, how much money I'm making. And the best part is it has one of the highest interest rates of a savings account at 1.1% a year. So just quick math. If you have $10,000 in that account, you're going to make $110 for doing absolutely nothing in there. It's more of the out of sight, out of mind philosophy. And what you're going to be doing is moving money over month. And what it's going to do is going to build that nest. You're going to feel less anxiety because you have that money there. You have that money sitting there just in case an emergency comes up. Regardless of a pandemic, this is good advice to take. If you have some sort of safety net to fall off on, less bad things are going to happen in your life. You're going to feel more comfortable and you're going to have less anxiety in life. And the second tip I'm about to go over, this is the first time you're hearing about this, you're probably going to be so happy that you're going to end up sending me some kind of fruit basket with some nice cheeses to go onto the side. Or, at the minimum, you're going to subscribe to the channel and you're going to like the video. What a sellout. Shameless plug. But seriously, refinancing your mortgage. Right now, the Federal Reserve has interest rates at the lowest they've ever been in history, and you can take advantage of it. Bankrate.com says a fixed year mortgage is going anywhere between 3% and 3.5% depending on your current financial situation. That's crazy. It's like giving you away free money. So let's do some quick math. Let's say I have a home that I financed for $200,000 at a 4% fixed rate for 30 years. Over the course of that loan, I'm going to pay over about $343,000. Let's take that same amount for $200,000. Let's lower the amount that we're going to finance over the years to 20 years, and we're going to kick the interest rate down to the average right now of 3%. I'm going to end up paying $266,000 over the course of that loan. That's crazy. You're saving $77,000 just by signing a piece of paper. Yes, guy that sucks at math. Monthly payment's gonna go up $150. What if I told you, if you gave me $150 every month for 20 years. It costs you somewhere in the ballpark of $27,000, but at the end of it, I would give you $77,000. It's $50,000 returning on your money. Would you take it? I guess so. That's right. Don't be the guy that sucks at math. You want to be the guy that's good at math. And if you're worried about the closing cost or getting an appraisal or anything like that, don't be. Talk to your loan provider. A lot of them will just slap it on the back of the loan. If you don't have the cash for it, at least have that conversation. It's worth having. You're saving money just by signing a piece of paper. It'll be literally the easiest deal you've ever made in your entire life. Thank me later and like and subscribe. This is at least the minimum you can do for me for giving you this information. Now, tip number 3, and I want to emphasize something. You need to be in a financially stable place in order to be participating in buying individual stocks. It's something that you can make a lot of money for, absolutely. There's a lot of upside, but there's also a lot of volatility. So you need to make sure that the money that you're putting in is something that you're absolutely comfortable, that you're okay with losing. If you need to have it to pay rent, or you need it for next month, or you need to still build your safety nets, absolutely put it towards that. Stop watching the video. Can't stop right now. Don't put your money in financial stocks. Just keep doing what you're doing. But if you're financially stable, let's talk about some things that you can take advantage of. The 2 stocks that I really like right now are Coca-Cola and InBev. They're both similar in the fact that they're total conglomerates in their respective industries. But right now, they're affected immensely by not being able to sell in venues, bars, and restaurants. That's a high margin, high dollar business, but they're floating by in the retail market. Consequently, they're also offering investors dividends to ease some of the tension. So you're buying at a discount and you're getting dividends. And as soon as the pandemic or normal, whatever that is, goes back, and you start going out to restaurants, you start going back to ball games and whatnot, and you're going to see those 2 stocks go up as restrictions become less and less for congregating in public places. The 3rd stock I really like right now is Starbucks. Starbucks is one of those luxuries that gets cut out when people's daily routines change. You're going to work, you get your Starbucks, and you're rushed to try to get back on the highway just to get jammed up in morning traffic. That's normal life, but that's not happening right now. A lot of people are working from home, so a lot of people aren't venturing out, and consequently, they're not getting their normal fixings from Starbucks. So sales are absolutely slipping. But right now is the time to buy. Starbucks is making a move into the China market because the Chinese diet is switching from drinking tea in the morning to drinking coffee, similar to the American diet. And right now, their biggest competitor is Luckin Coffee. And if you Google anything about Luckin Coffee in the past couple of weeks, it's not been so great. A lot of scandals going on. They're going to continue the same business model that they have in the United States, where they're buying real estate. They're a real estate company. They're buying prime pieces of area where there's a lot of foot traffic, and you're constantly seeing that brand image of Starbucks. So that's what you're thinking about. You're thinking about Starbucks when you're not even by a Starbucks. And then when you get to a Starbucks, you have that craving for it. They're going to follow that same business model in China, and consequently, the stock's going to shoot up. Right now, to ease investors, they're paying a little bit of a premium on their dividends. So it's advantageous to buy right now, and to ease off in case there's some uncertainty of what happens with this pandemic, they're giving you a better dividend. It's a win-win. The 4th stock I like right now is Bank of America. There's 2 other guys that actually like Bank of America a little bit better than me. That's Warren Buffett and Charlie Munger. And if you don't know who those 2 are, they're basically like Tiger Woods and Michael Jordan of investing. Now let's take a brief moment and go back in history, back when my main man Warren Buffett was buying Bank of America shares. Back in 2019, the end of May, he was buying Bank of America shares for $28 a share. As of this video, July 6, 2020, Bank of America is trading at $23 a share. Now, Warren Buffett is heavily invested in a company that's probably a company that you want to be invested in too. But right now, the near future of Bank of America looks very bleak. There's a lot of uncertainty with people's financial situations and defaulting on mortgages and people not paying mortgages. But Bank of America has the balance sheet, has the cash position, has the investments to weather the storm. And I believe that they're going to come out ahead and stronger and probably take over market share within the banking sector. So right now is the time to buy. Plus, bank stocks have some of the highest dividend paybacks of any stocks that you can purchase. It's a win-win. Hey, you there. Thanks for watching again. I really appreciate it. If you like the content that I talked about in this video, please give me a thumbs up and go ahead and subscribe so you don't miss some of this glorious content of me just rambling on about finances. And there's probably like 20 screenshots you could take with some very, 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 very memeable mannerisms that I gave throughout this video. I promise you, if you subscribe, you'll at minimum get that if you don't learn anything about finances. And as always, thanks for tuning in to Money on Main Street, and I'll see you next week.